Hey everybody, this is Sean Wilkins, loan officer with Fairview Lending. Every time there's a Fed meeting or a Fed announcement, we get a lot of questions. Hey, how does this affect me? How does this affect my interest rate? Does this mean rates are going down? Does this mean rates are going up? And so I wanted to take a video and kind of explain how it all works. So first of all, the Federal Reserve does not directly affect mortgage interest rates. The Federal Reserve is the centralized banking institution in the United States. They adjust monetary policy, so they kind of handle money and how it moves in the United States. And the main thing they do is they adjust the federal funds rate. So when you hear about the Feds, will they drop rates? Will they raise rates? That's the rate that they're talking about. The Federal Reserve does not directly adjust mortgage interest rates. They adjust the federal funds rate, which is, believe it or not, the rate at which banks lend each other money on overnight markets. Gets kind of complicated and convoluted from there, but the Federal Reserve does not adjust interest rates up or down in the United States or Florida. What they do has effects on interest rates in the United States. So when the Federal Reserve indicates that they're going to be cutting rates or they're going to be raising rates, the markets, specifically the 10-year Treasury bond, react to that data, and that has the direct effect on mortgage interest rates. So based on what the Fed decides, and more accurately based on usually their comments after, where they kind of give an outlook on what it looks like for the rest of the year and going forward, that is what has an effect on interest rates. For example, back in September, the Fed dropped interest rates, but based on the comments after the meeting, mortgage interest rates, again, not directly affected by the Fed dropping the Federal Reserve rate, went up. So sometimes it can have the opposite effect. It's really based on speculation, a lot of feelings, a lot of how they feel the markets are happening, what's going to happen going forward. And that is kind of how it has an effect on mortgage interest rates. Now, that being said, the Federal Reserve rate does have a big effect on some mortgage products such as HELOCs or home equity lines of credit. If you have a home equity line of credit and the Fed drops rates, you'll see an almost immediate impact on your home equity line of credit interest rate. They adjust up and down based on what the Fed does. Same thing with adjustable rate mortgages. But if you want a more substantial correlation of what's going to happen based on to your 30-year fixed rate mortgages, you can always look at the 10-year Treasury note. If that's up, rates might be going up. If that's down, rates are probably dropping. And as of today, it was around 4.3. We've seen it as high as almost 5 in the about a year and a half ago, and it's got down under 4 into the 3s third quarter of last year, and it dipped for about an hour or two this year to 3.99. We're in a pretty volatile market with rates because there's a lot of stuff going on, but the overall outlook is that rates eventually will get there. A lot of us thought we'd be there by now, but rates will eventually be down from where they're at right now is what most people are kind of banking on. Does that mean it's a bad time to buy, a good time to buy? Well, I look at it like this. You can always, if the rates drop later, you can always drop your rate later, assuming you can refinance your house. Now that's a big assumption because you got to have the credit score, the equity, the income, a lot of things, you never know what the future holds, so a lot of things depend on that. But you can't ever get the house for cheaper later. So if you're buying a house for $350,000 right now, and you wait until rates drop a point, but now that house is $400,000, you didn't do yourself any favors there. So if you have questions on whether it's a good time to buy, what's going on with your interest rate, is it the right time to refinance, we can give you that personalized conversation and make a recommendation based on what your specific needs are. Give us a call today. This is Sean Wilkins with Fairview Lending, and look forward to talking to you soon.